Welcome at forextrading.com. This is trading review. It is different from daily technical analysis because we are talking here about some common real life and demonstration account trades that occurred on a chart. And today is Monday. It's 2nd of April 2012. Let's take a look at the charts. Right now we are looking at the left side. We are having euro dollar daily chart, which is breaking out from consolidation, but this chart was really missing out something. We had a breakout occurred at the chart and then it took back. There was some reasons that the market took back this move and came back to this comfortable consolidation zone, and right now it is breaking out again. More interesting seem to be pound dollar daily chart that we are looking at the right side. The consolidation is more clear and the market is breaking out more aggressively. So it is more convenient to enter this market if you are doing the buyer trades at those markets. For me, it is a little bit risky at this moment, but I understand that some players, some investors will try to enter those positions at the real life market and to take some action. Let's take a look at 4-hour chart. Maybe here we got something more interesting. The way I see the market recent day is really, for me, it is no special action to take the place on the market. You can take a look also at S&P 500 contracts, and right now here you see we got two breaths near each other, so it might be telling us that the buyers are really taking some break, but statistically we have buyers at the market, so we have much more reasons to grow with the market than taking a bigger or small breath to the downside. But you have to stay focused to know exactly what the market is doing at this time, and compare it with some probability. I mean, statistically, how the market is moving. Is it moving from this perspective higher and higher or lower? So basically what I'm trying to say that you have to be impartial. You have to take no side of the market if you are not in the trade. There is no reason for us to be more bullish or bearish. So right now I can tell you there is more probability to market go higher and higher, even though it is taking like two breaths near each other at short term. Looking down at different chart, gold is staying in this big consolidation. Right now instrument is there is lack of buyers and sellers at the market, so there is really nothing to do. But if you stay focused, you may not miss the situation when the market will break out at the bullish positions or take the bearish action from the lower perspective of this rectangle pattern. So we stay focused with this chart because gold is very interesting instrument in long and medium term. Recent weeks I was talking about oil at daily chart. We're looking right now and we see a lot of bulls coming into the market. So we have buyers and buyers, and a week ago I was talking about this beautiful triangle, and I was speaking metaphorically that we have buyers and sellers at the market, but most likely at most of the instruments we see the bearish action from this kind of behavior. But you have to be careful that market is going down right now and it might be going lower and lower, but at this instruments and at this particular situation it might not be interesting to enter the market because we are really looking for some bullish growing trend right now and later on. So the bearish action, I mean market going lower and lower, might be interesting only in short or medium term. The funny story about this triangle and this kind of pattern is that at different time frame, this kind of behavior will be having different probability. So at daily chart at oil, it will be having probability of going lower. and at other time frame, at 1 hour chart, it will be having probability the same view but different time frame. It will be moving statistically higher and higher. Also at different instruments, I'm talking more about it at Forex online courses and video courses, that this kind of pattern, like most of them, has a different meaning, different probability of behavior depending on instruments. Is it like bullish instrument like this one, or is it a currency that there is no big difference for a currency? Is it really going lower and lower or higher and higher, or the trend is changing much more often than at some commodities, for example? So interesting might be what it's going to be, but for us, more interesting is when it's going to hit the new highs to enter the market again and to move with the bullish behavior at this kind of market. But let's take a look at 30-minute chart. This is a day trading opportunity to enter the market for few minutes, few hours, sometimes few days. And these charts right now are consolidating, and there is nothing interesting right now. Unless this market is starting to move lower and aggressively lower at both of these charts, there is nothing really to do for me here, because the probability of the market going higher and higher, you see we have a breakout here, and there is really not too many points to take from the market, really 40 points, and the market moved back to make a 13 points if you enter the market right here, and really you would enter the market a little bit later on. So these kind of trades are very risky. That's what I'm suggesting at Forex online courses. I'm talking more about these and other trades, why some of them are very much worse than the other ones that might be very similar. So let's go to euro dollar right now and take a look at few actions that occurred at 30-minute charts that we are looking right now. Here we get some of the winning patterns that I'm talking more often at the courses as the winning repeating patterns, and how to use them, how to spot them, how they are different between each other. Here we got one of these situations like this environment, and the market started to move lower and lower, and here we got at 10:30 or 11 o'clock, it was there's some macroeconomical data coming in at the market, so we got some news entering the market moved back higher and then started to move aggressively lower than the we entered the market to make about 40 pips, and that's it. The second part of the trade moved back to the break-even points, so there is no profit from the second part of the trades. I'm talking more about trades and how to enter the market, of course, when we have a little bit more time or different video analysis. Let's take a look at other opportunity that occurred. I'm showing here only a few of them that might be very interesting and easy to spot and not to miss and to use them in the future. Here we got a beautiful flag. This is not the perfect environment, because the perfect environment would be market going lower and the flag occurs. Here we got some settle down of the market and the flag occurred, so it isn't perfect. But even though entering the market after this kind of flag and the dropping downtrend environment might be interesting to make some points, to make some pips at the market. Here we got also one pattern that was looking like the winning pattern, and the second one that brought us a huge profit at the live market. So I'm talking here about 80 points of the profit. Here's the reason to enter, get out of the trade exactly here. So entering somewhere around here would make us about 80 pips easily. But really, it's not about how many pips you make at the market. It's rather about how many pips you can make constantly during week to week or month to month phases. It can be a 5 pips, 20 pips, 25 or 50 pips. It doesn't have to be 500 pips like I'm sometimes watching in different websites or different books that people say they made 500,000 pips. If I would be making few kind of trades like this during the month with the position I'm making right now, I would retire in few months. So it all depends at the it depends from the size of position you are entering the market. So it's sometimes it is much better to be sure of 20 or 30, 40, 50 pips and to put the big size of the lots at the market, big position, than making unsure profit and take 500 pips from the market. So what I'm trying to say, there is no reason to make 500 or 1000 pips a month or quarterly. You can make 5 pips each month and still be a very successful trader, and to double your account in few months or year. That's what our object is, to double our account in some um, time. And these situations, some of them are really interesting, other aren't because of the time of trading. Here we got European opening. That's the time we are spotting some examples of the trade that might be interesting to entering the market to take your 50, 70, 80, 150 pips sometimes. So that's pretty much it for now. There are many patterns that are repeating at different time frames, different instruments. You can use them when you know exactly how do they work and what is the difference between good or weak environment to enter those trades, because different triangles, rectangles, different flags, different opportunities occur in different environment, and that's what we all doing at different forex courses to show those differences and to enter the markets in the right way. So thank you very much for listening. I hope you have a great week of trading. Thank you very much.